Hey, this is Mark the Meerkat suffering in for Dez for the weekend review. Good through April 27, 2013. Well, first I'd like to take pause here. This is Memorial Day in the U.S., and we just want to pay tribute to those who gave the ultimate sacrifice so that we might have the financial freedoms that we have in this country. Our hats off to you. Well, let's take a look at the bearish day on Wall Street today. Well, mostly bearish. Let's take a look at the S&P 500 down 0.6%. Dow Jones Industrial up 0.6. NASDAQ down 0.1. And the small caps were basically even. Yeah, after all those gyrations in the morning. But banks were up rather strongly, so that's a very bearish sign. And it shows here that the VIX ended up just being even. And gold and silver down again today. It was after being up big yesterday, as well as oil. And then the dollar was down again today. We are at 1.25 on the trend. For those Grok grads, please note that. Well, for the week, this is the first time in 5 weeks we actually had a down week. If we take a look at the S&P 500 weekly, you can see 1, 2, 3, 4, and then bam, we are down for the week just slightly, just 1.1%. In fact, the NASDAQ and the small caps were also down 1.1%, and the Dow Jones Industrials were down only 0.33% for the week. Let's take a look at the daily for the S&P 500. We came up here during the week on Wednesday. We had a big, huge Fed meeting, and nobody knew exactly what they meant, and we'd have fallen down the last days. But take a look at this. Both days it came down and pulled back up, came down and pulled back up. That's more of a bullish sign. In fact, let's go to the 5-minute chart. And today we gapped down, went down, and then it just came climbing back, and a little dip at the end. So you see, that's the same thing that happened yesterday on Thursday. Let's take a look at the Dow daily. Here we go. Again, we're running up and just doing a little bull pullback here, starting to form. Again, people buying on the dips. This is a buy the dip market. Take a look at the Dow weekly. And boom, 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 boom. Man, look at this run here. Look at this run. It's incredible. In fact, let's take a look at the monthly. Look at that monthly. 1, 2, 3, 4, 5, 6 up candles in a row. Now, we're not quite to the end of the month yet, but good golly, Miss Molly. We are starting to get a little overextended there. If you look back here, 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. It doesn't go much longer than that without some kind of a monthly pullback, typically. All right, let's take a look next at the NASDAQ. Here's the NASDAQ daily, and again, we had that breakdown from this rising wedge, and now it's just basing right here, not gaining any traction at all. We take a look at the weekly. Here's the weekly, again, up 4 weeks, and now a small pullback, just 1.1% for the week. Next, we have the monthly. Here's the monthly chart, and 1, 2, 3, 4, 5, 6. Working on number 7 here. This could be interesting. Could be interesting next month. All right, let's now take a look at the small caps. Here's the Russell daily. Again, it was running up and fell back. It's still inside of the rising wedge, so not as bearish as it was for the NASDAQ. Take a look at the weekly chart. And 1, 2, 3, 4, and then just pull back just 1.1% on the small caps. Take a look at the monthly. Here's the monthly. Look at that. 1, 2, 3, 4, 5, 6. Do just a little bit there, but yeah, we are getting a little extended there. But again, doesn't mean it can't keep going up. We have to keep trading what we see. If we take a look at gold for the week, we got ourselves a double bottom here, working its way back up now, and kind of zigzagging around these moving averages. Take a look at the Apple for the week, and sure enough, we had a retracement here right to the 61.8 as far as being a bull pullback here. We were looking at this in the mentoring class last weekend, and just slowly gaining up here, but caught up in the moving averages, especially the 20-period moving average. So in summary, this is the first down week in 5 weeks, just down 1.1% on 3 of the averages, and then this is still a buy on the dips type of a market. People are looking for an excuse to sell out, but they're not doing it. So they've now gone into this long weekend. Let's see what happens after May. Now, if your trading is not where you'd like it to be, I want you to seriously consider getting some mentoring. And why do I say that? Because 89% of people do not make money in the markets. But those who do, over 90% of them have mentors. We do offer a 3-day immersion mentoring. It's going to mean up this next month in June 15th through 17th in Las Vegas, Nevada. We're going to be doing that live in a classroom with folks. And just as an added bonus, not a reason for going, you want to go because you want to improve your trading, but Rachel Fox, who is a child star from the Desperate Housewives, is also a stock trader. She's only 16 years old and has been very successful at that. And she will be attending that training as well as presenting part of it. So again, not a reason to go, but just an added bonus. But if you'd like more information on that, you just hit this mentoring button on the front page of our free online tradingeducation.com, and it will tell you about the program. And here's some of the benefits of it and testimonials from those who've been there before. See how what effect it had on their trading. And if you'd like to find out more information and have answers to all of your questions, and maybe even a little bit of an interview with Carolina, just fill out this form and she'll give you a call, and to see if it's appropriate for you to be in that training next month. Well, this is Mark the Meerkat Suffren. I just want to give you a quick quote from Dr. Alexander Elder. No amount of intelligence, knowledge, or computer power will save you from a disaster if you trade without a stop. Stops are essential for your survival and success. Have a great long weekend. See you Tuesday.